right, let's move to the market now. Just before we get out of time, the NGX is back on the positive trend, and we hope that's sustained. We'll know by the close of trade today, but yesterday, the all-share index was up 0.55%. at 98,762.78. Equities cap, 303 billion naira was added to the market cap at the close of trade yesterday. 55.85 trillion naira is what the market closed with. And we see that the most liquid counter is back on the move. But I mean, let's talk to Mr. Abdulrasheed Momo and see if we can expect this to continue, or if it's just one of those excitement that goes away before you know it. Mr. Abdulrasheed Momo, good morning and thank you for your time.
Morning, and how are you?
Yeah, so we saw a positive close before the holiday, and then at the resumption of the holiday on Thursday, we saw another positive close. Are we back on the positive trend, or is this just a dead cat bounce?
I don't use the word dead cat bounce. Reports, April was not a good month at all. For the past 3 months, the market has been oscillating within about 98,000 points to about 103,000 points. But the month of May, we did see a minor breakdown from the support level, which actually threatened the market. But what I realized that for the past 3 days, I think 3 days or 4 days towards the end of the month, we saw some form of consolidation. We saw increased volumes, buyers buying into the dips and the rest. As it is now, for me, the market for me is between a support of 98,000 points and 100,000 points. So we're at 98,000 points now. We hope, for me to see a new trend, the market needs to break 100,000 points first. So as it is now, possibility that perhaps getting to that resistance level might see some people taking profit. But what I can say that we are within a trading band of 98,000 points and 100,000 points. That is the trading range for now for the market.
And we've seen a lot of results. I mean, interesting. We have first quarter results coming in. We just saw that of Transcorp Hotel this morning, and revenue growth of about 800%. Really impressive. But we've also seen some other companies where there's been losses. I think we had Eternal Oil, we've had Access Co, and all of that. We've also seen it's like a mixed bag. Is this affecting the sentiment of investors at this time?
Not really, because the most traded sector now so far has really been the banking sector. Perhaps because we know we're in terms of dividend payout, yes, UBA has been exceptional for some time, because I think they'll be paying before, I think May 10th. That stock ought to have moved a long time, but I think we saw some strong selling into about around 23 naira. But for now, it is the way the buyers were able to break that jinx. I don't know how far that stock will go, but what I can say is that we have seen. Normally, when I speak in terms of what I've been analyzing in terms of charts, market history. What I've noticed that Access Corp, when they marked down at 20 naira, it dropped about 16 plus. It's trying to recover now. Even the almighty Zenith that paid a dividend of 350 actually lost about 2 naira. So I hope UBA doesn't follow suit, but it shows that we now ask ourselves, do I actually wait for this dividend or I buy after markdown? You understand? So it's still shaky for now, because the NGX Bank was the worst hit last month. We saw huge corrections despite all the good financials that we saw. And as we always say, the market prices in a lot of things, a discounting mechanism. With the Q1 in place, we've seen some from Stanbic, As you said, Transcorp, we are looking good, but we don't know how market is going to feel. But the most important, if the market breaks 100,000 points, then we know that it's a new leg up, because it's the index we normally use to determine the next leg up or down. So as long as for now the index is within the trading range of 98,000 to about 100,000 points, if market breaks above the 100,000 points, then we can now say this is a new leg up, if it's a genuine bull trend.
So do you see this trend, this positive trend, as sustainable, or are we going back to the bear zone?
I've told you, it needs to break 100,000 points first. Let it break 100,000 points.
So do you see us breaking the 100,000 now, or are we going to have more setbacks before we go back?
No, if it breaks the 100,000 to the upside, then we know there's this current bull trend is a genuine trend. If it doesn't break 100,000 points, then we might be back to about 97,000 points, which you saw in April.
Yeah, we saw that even last week. So, just before we ask you how you think the market will close, another interesting counter is the oil and gas. That counter is so quiet, even though we saw a bit of recovery this week. We've seen a bit of recovery this week, but it's so quiet. And now we have Q's back. We have Dangote. We have stories around Kaduna Refinery, Port Harcourt Refinery. This news, aren't they supposed to move the stocks on the exchange?
There's you see, on the oil sector, what you need to know that what is the most liquid stock in the oil and gas sector in terms of volatility? It's only Owando. Owando is the only one that gives volatility. If you look at corn oil moves once in a while. You might see the trend. You might see corn oil hold for about a month, a week before you see market move. You see stocks like let's say even Seplat, you understand? So it's only Owando that is the only stock that is volatile, that is liquid. So most of the movements you see, if Seplat or Corner moves, or even MRS, you see that you hardly see movements in those stocks. It's just once in a while, you see. So all those ones cannot trigger the oil sector. It's mostly Owando that moves all the time, either up or down, that actually affects that sector. Most of the stocks in that sector are not liquid.
Oh, wow. So I wonder what's the fate of those investors in the other stocks, especially MRS that had indicated interest to delist. But thank you so much. That's much we can take, Mr. Abdulrasheed Momo, for your time this morning. Enjoy the rest of the day.
Have a nice weekend. Thank you.